Hi guys, welcome to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka. Well, what a week it has been for the Bulls. In fact, we hit that 20,000 mark for the first time. Then we, sprinted past the 20,200 mark in today's session as well. In fact, for the week, the Nifty is up nearly about 2% or thereabouts. The broader markets also have stabilized after the kind of drubbing that we saw on Tuesday, but they have stabilized for the time being. We'll have to see whether or not it was just a one-off or we could expect some bit of correction in the broad end of the markets going forward. But in today's action, autos were in top gear led by, Bajaj Auto. Of course, we'll be talking about why the stock was up over 5% in today's session. You had the likes of Tata Motors, Hero Moto also gaining, on the back of that rally that we saw on Bajaj Auto. Aside of that, PSU banking pack has been extremely buoyant this week. The index was up somewhere around 1.5% in today's session. IT and pharma were among the other top sectoral gainers today. What didn't do well was, of course, the FMCG pack. That has been under pressure for some time now. Metals and realty were the other pockets that weren't doing all that well in today's session. If you look at some of the top Nifty gainers, aside of Bajaj Auto, you had Hero Moto, you had Grasim. That stock was gaining yesterday as well. You have HCL Tech, Tata Motors, and a whole host of other counters. On the losing end, you had BPCL. Remember, the crude prices have once again topped that $94 per barrel mark. So, that is weighing in on some of these OMCs. So, all these BPCLs, HPCLs and IOCs were under pressure today. Asian Paints, even yesterday, that stock was under pressure. Some competition concerns coming in, given the fact that Grasim will be launching its paints brand in the fourth quarter of the current fiscal. So on the back of that, that stock was down. HUL, ONGC and Britannia, some of the other laggards in today's session. Lots of movers in the mid-cap end of the markets as well. So you had Vodafone Idea, that stock was up and about. You had UCO Bank, Central Bank, so mid-cap PSU banks continue to rake in strong gains. You had Restaurant Brands Asia, that stock was also, I think it hit a fresh 52-week high on the back of a block deal in the counter. In fact, the promoter Everstone may have sold stake according to sources. Fact, Mazgaon Dock, some of the other Nifty 500 gainers. On the losing end, you had Jindal Stainless, Supreme Industries, Aegis Logistics and IOC. But let me bring on board my guest for today. Joining me is Ambreesh Baliga to take stock of the markets and where they are headed after the kind of run-up that we've seen. Good afternoon, Ambreesh. Thanks a lot for taking out time. But, given the kind of up move we've seen, we did, fizzle out last time and we were looking to, clock that 20,000 market. We missed it by a whisker. But this time around, we clocked that level decisively. Not just that, 200-point rally within the next four sessions. What has changed? Do you think anything has changed fundamentally to drive the kind of up move that we are witnessing on the Wall Street?
Nothing majorly has changed except for the possible the sentiment because of the G20, the success of G20. I think that was the sentiment booster for the market to cross that 20,000 Nifty, which it was not able to for the past couple of months. And once it crossed that, it's quite natural that a lot of fence sitters who are actually waiting for the markets to correct, much below 19,500, maybe to 19,000 levels. I think they are the ones who also jumped in to start buying. Because of that FOMO effect. And I'll not be surprised if this takes the market still higher. Like you could see 20,500 or even 21,000 levels in the next couple of weeks. But that does not change my fundamental view on the market. I'm being cautious even at 19,500 levels. So if just because it has crossed 20,000 levels, the fundamental view does not change, except for the fact that it possibly gives me a better opportunity to possibly book out some more from my portfolio, which are continuing so.
All right, let's also talk about the broader end of the markets, Ambreesh. Tuesday, we saw a very, deep crack coming in on the mid and small cap end of the markets. But ever since then, they've managed to stabilize a bit. But do you think there is a bigger correction around the corner, at least for the mid and small cap end of the markets?
We really don't know as to what caused that crack because there were some vague rumors floating around in the market. So because of which I think we saw that correction, but that clearly shows as to how brittle the situation can be I mean, if something really was to happen, something wrong, I mean, really had to happen, you could, I mean, then possibly that is a sort of a trailer as to what could happen in the mid cap and the small caps, because we have seen that, I mean, that in the past also, whenever, I mean, stocks in this segment has cracked, I mean, there is hardly any liquidity at lower levels. So one needs to be extremely be careful while dealing in these stocks. I mean, when the going is good, when the sentiment is good, I mean, everything is fine. You make your money, but then at the same time, you should know when to exit.
Right. I also want to get in your thoughts on what could be the big risks emerging going forward. Of course, we've seen crude oil prices, once again
Mhm.
heading towards that $100 a barrel mark. But domestically, things seem to have been stabilized given the fact that inflation has once again come below that 7% mark. And RBI had any which ways said that, once the food inflation eases off, inflation could well head lower. But aside of this, any other risks that you are anticipating going forward? We have earning season coming up as well, and we all know that IT could be a little a bit of a spot of bother. So,
Right.
any other risks emerging going forward now for the market?
See, I mean, again with the earnings, since we have seen that Q1 also was decently good, I think the expectations from the analysts would have gone up, and especially with the way the markets have moved. So there is a possibility of a higher disappointment happening in Q2. Secondly, when we are talking of the oil prices, I mean, the oil moving beyond that $90, closer to $100. And in addition to that, I mean, at least earlier we had the Russian crude available at a lower price, which is not the case any longer. So I think it'll be sort of a double whammy for us, and I think this will really prick us. I mean, like oil closer to $100, and especially when you have the general elections around the corner. In fact, it was expected that possibly we may have I mean, a price cut in petrol and diesel, just like what we had in LPG. But I think that is out of the, I mean, window right now. And at the same time, I don't think the government will allow the OMCs to increase the prices. So I there'll be a decent amount of pressure on the OMCs, and I think that's already seen in the stock prices today. And as far as inflation is concerned, I mean, this could be one of the reasons for the inflation, and the other reason could be I mean, the monsoons, which hasn't been really well spread, and I mean, that could be some sort of an issue. Maybe we'll know better towards the end of the month as to how, I mean, how good or how bad the monsoons were in various parts.
Right, you brought up, the monsoons. Of course, El Nino conditions are developing, and because of which sugar output will also be impacted, right? Sugar stocks are already in a sweet spot given the fact that there's a global shortage and prices are at a 6-year high. Do you think sugar will continue to be in a sweet spot, or do you think government will intervene, when it comes to pricing? And perhaps the rally could maybe fizzled out, even though we have that ethanol opportunity that could bode well for some of these sugar stocks. How should one actually look at sugar stocks at this current juncture?
No, I mean, sugar stocks is just not sugar price. I mean, although we are expecting a shortage, because of which we have already seen the sugar prices going up. This is no doubt a major positive. But at the same time, I think the ethanol story, I mean, would still play out much further, since we're talking about 20% mixing in petrol. So I think overall, if you're talking of the next couple of years, I think the sugar story will play out extremely well. And let me also tell you that I suppose sugar is the next oil, because it is just not ethanol. Ethanol is just part of the story when I say sugar is next oil.
Right. Let's talk about the PSU pack. Rail stocks, defense stocks, now PSU banking stocks as well, especially the mid cap ones. I mean, they have been on a tear. I mean, do you think that space is extremely overheated now? We've seen some of these stocks like triple, price wise. So, what's the outlook there?
No, I think I mean just because there's momentum in those stocks, good stories are coming in because of which we have seen the stocks move, and they continue to move because of the liquidity flows which are there. I mean, it's good that the order flows has been excellent, but to a large extent, the order flows have been discounted. I mean, what needs to be seen now is the execution. I mean, can these companies execute the sort of orders they have received? Because I mean, for anyone, I mean, big or small, it is. I mean, you have a certain limitations on. I mean, how much you can execute. I mean, if you are capable of doing one, and if you're getting orders which are 8x, I mean, is it possible for to execute? I think the markets have already gone. I mean, too much beyond. looking at just the orders. And I don't think anyone is really questioning the sort of execution capabilities. I think this is the big risk, going ahead. And at the same time, I'll just give you one example. A stock like IRFC, which is Indian Railway Finance Corporation. The issue was at 26 rupees. The stock was languishing at 1920. And at those levels, I really found a lot of value. It was quoting at a discount to the book value, extremely good dividend yield. And I had projected a price of about 36, and maximum I could have projected a price of 42. Stretched, I could have taken it to 42. Today, the stock moved up to about 90 plus. Today, it's quoting at closer to 80. And the business model has not changed. It's the same old business which they've been doing. I don't know as to why it should be quoting at these levels and why it was not even looked at. Back.
Right. Let me come and shift your focus towards the auto pack. Hero Moto today, Bajaj Auto today has seen a 5% rally. Of course, there is a very positive report that has come out from Bank of America, and they have a very bullish view on the stock. They say that the growth levers are in place, and of course, they have launched a premium bike recently to take on the likes of Royal Enfield. Exports were a spot of bother, for Bajaj Auto. But do you think that's something that is in the past, and the picture could improve anytime soon, and perhaps Bajaj Auto is looking the most attractive when you talk about the two-wheeler space?
Yeah, I think things should improve as far as Bajaj Auto is concerned, especially on the export front. And I believe, at these levels, there is still some amount of value left. As compared to the other stocks, I won't say the other auto stocks, but if you're looking at, the other stocks at large, Bajaj Auto still has some value left, even at these levels.
All right. What about the cement pack, Ambreesh? We've seen, two price hikes coming in this month itself. The likes of Ultratech, India Cements, or even Ambuja for that matter. Anything catching your attention at this juncture?
Yeah, in fact, I believe the story should be extremely good for the cement pack if you're talking of the next 4 to 5 years. What we have seen in the last 2 to 3 years is that the volumes have gone up, but their margins hadn't really moved up, because of which we didn't see many of these stocks really perform too well. But now we are seeing that the prices are moving up, because of which I think the margins should start improving. And among the stocks which I would look at buying, possibly on a correction, would be clearly a stock like Ultratech, Ambuja, and a smaller one called Nuvoco Vistas, which is a Nirma Group company.
Right. About the paint stocks, I was mentioning that Grasim has announced the brand name under which it will be, launching its paints business, and that's by the fourth quarter of this fiscal. Even though they've maintained that they want to be the number 2 player in the country, we've seen Asian paints, kind of sulking in trade.
Right.
Any threat of market share loss to Asian paints from Grasim going forward?
No, I don't see any issue as far as Asian Paints is concerned, because let me tell you, manufacturing paints is no rocket science, but marketing and selling of paints is a tough thing to do, which I think Asian Paints has got it really well. Because of which, the closest competitor is about 1/4 or 1/5 the size of Asian Paints. So any of these large, business houses like Grasim or JSW, and now Pidilite also is getting into paints. Although they have deep pockets, I really don't know as to whether they'll be able to, get the network which Asian Paints has got. Because let me tell you that selling a Fevicol is very different than selling paints. You may be selling cement or steel, but again, selling paints is a different ballgame altogether. And to get that right is going to be very, very difficult. The way I see for JSW or Grasim or even Pidilite, I think they will be competing more with the third and fourth player, or maybe the regional players like in the Indian market, as compared to Asian paints.
Right. I want to get in your thoughts. I also want to bring in your thoughts on the IT stocks once again. We are expecting the next couple of quarters to be a little subdued, of course, in the wake of slowdown in discretionary spending. But IT stocks have staged a very smart comeback ever since they reported their first quarter earnings. Is it because they are, trading at attractive valuations? Perhaps would you say that this is the time to actually enter into these stocks and wait for that recovery to play out?
Yeah, I would say so, because compared to the other stocks in the market, IT space is looking comparatively attractive. And in case, the Q2 earnings is again a bit soft, I think that will be another sort of opportunity to buy IT stocks at a lower level. Because come 2024, I suppose we will have new budgets for the IT space, and that's when we'll start seeing some sort of an uptick and a continuous uptick as far as the IT space is concerned. So I think we have the next 3 or 4 months to buy into IT.
Right, I just want to ask you one last question, Ambreesh. If I ask you for a contrarian bet in the market, sector-wise, any sector that perhaps the market is not really betting on, but you feel could do well in the near to medium term?
In fact, one contrarian bet, as a sector, I would surely look at the specialty chemicals, which again, had performed extremely well in 2021. But after that, we saw a decent correction. Now, I suppose valuations are extremely decent. Couple of these companies, we have world-class capacities. So I think that's what is going to play out, because the China plus one is going to play out now as far as specialty chemicals is concerned. So this space, I think, should play out over the next at least foreseeable 3 to 4 years. So still a time to buy.
All right, still the time to buy into specialty chemicals. But I hope, Ambreesh, next time we catch up, perhaps you'll be looking at 21,000 or 20,500 or thereabouts. But any level per se that you'd be watching out for as we head into Diwali?
No, this one I think we should be anywhere between 20,500 21,000 levels for Diwali.
All right.
But again, like I said, I would possibly utilize that to book more profits than to buy.
All right, sell on rise is the market call. Well, with that, Ambreesh, thanks a lot for tuning for catching up with us and sharing your thoughts, and of course your takes on the different sectors that we spoke about. Look forward to catching up with you soon.
Thank you. My pleasure.
Well, with that, it's a wrap on this edition of Closing Bell. Thanks a lot for tuning in. If you have any comments to share, send them in the comment section below, and we'll take note of that. But of course, I'll be back with the markets on Monday morning. Don't forget to tune in then. But till then, stay tuned to Moneycontrol for all your other news and updates. Thanks a lot for watching.